All right, so to all my inexperienced traders, those that are starting off in their journey, their new path, and learning how to trade at all, doesn't matter if it's futures, forex, options, whatever your poison of choice may be. Okay, and I'm saying that facetiously. You definitely want to know the correct way, and that is understanding one concept, which is structure. Okay, you've got to understand the flow of the market. Yes, a lot of people may look at it as if you're reading the flow or order flow of the market. Some people will say that understanding order flow is also, being able to not only follow price action, but looking at orders that are hitting the books as well. I can read the actual movement within the market by simply just looking at the chart, the patterns that it's making, if it's making higher highs and higher lows, breaking structure higher, or if it's doing the opposite of reversing and then moving to the downside, breaking structure, making lower lows and lower highs. It's very simple. Please don't try to overthink things and make trading more complex than it really is. It's fairly simple, okay? Now, I trade a simple strategy, which I talk about a million times over here on the channel. And to all my elite supporters out there, I appreciate you guys supporting my efforts as not only as a trader, but as a content creator as well, providing you valuable information that has helped so many of you out there, okay? And I'll talk about that supporter group, or the way to actually join the private community, which will really help you out if you really understand how to trade the correct way, okay? Because that's where I really go into great detail about trades I take, lots of them, okay, video after video, supplying you information that should definitely help you in your trading, okay? It's all simply understanding one strategy, which is basically multi-chart confluence. And all I'm doing is using top-down analysis. I'm picking a higher range chart to mark up my higher base zones, and then moving down or scaling down to a lower range chart to then mark up my lower base zones. Okay, it's that simple. All right. Now, watch some of the content here on the channel. Okay, and if you really want to understand and learn more in detail, and you really want a strategy that works, something that you can help you become more consistent in profitability over the long run, or maybe you're struggling right now trying to find a strategy that actually works, you may want to become an elite member, okay? Either an elite and ultra elite, but I'll talk about that towards the end. Structure is where it's at. I want to say that right now, because you have to understand, again, which way the market is moving. I failed in my first 2 years because I thought that just having a strategy and writing a few things down as far as a plan, and trying to gain control of my, psyche in a sense. And, because most people are affected by, everybody's just affected by when it comes to like the fear of actually trading, because it's a difference when you switch over from to demo and simulation and go live, right? Trying to control those nerves. All right. But the part of revenge trading or over trading, that tends to be a lean more so those that have a issue with gambling in a sense, because they just want to continue pushing the envelope, or they lose money and don't know how to cut the losses, and then they keep on at it. All right. So for me, I didn't struggle with that aspect of it. It was more so being able to read the market the correct way. I was taking trades against the actual movement of the market, or against the grain, when it was more so bullish overall on a higher base chart, okay, or a higher range chart. I was trying to go short, okay? So I had to understand, not just that, I had to really dig deeper and really find out what zones really make more sense. I didn't understand that concept, all right? Because you have what's called high probability versus low probability, especially the way I actually trade, where there's basically an imbalance or gap rest at the zone. I'm telling you guys, I go over a lot of detail to the private community, and anyone that wants to join, the link is down in the description. So let's talk about what I, actually struggle with. I just want to kind of cover this concept. And I want to give you just a quick rundown of what structure looks like, the pattern of it, using a line diagram for those that, again, are struggling with this. So let me grab this arrow. Oh, first of all, I probably have to move this down. No, that's affecting that. Okay. All right. So here we go. And let me say this too before I move forward. You don't need a bunch of indicators to trade from. All right. Do they help you out in your trading? Yes, they can point you once you're into a trade, or possibly before you even get into a trade, more so like if you're trading with like an EMA or SMA, that they kind of dictate the overall move or the direction of the market at that current time. But one thing about indicators you have to understand is that they are lagging. The best way I learned how to trade was trading pure price action, following structure, looking at structure based on and using a naked chart only. That's what helped me. Nothing else. Because at that time, everything was cluttering in my mind, having all these different indicators that I was actually trying, the RSI, the MACD, ATRs. Today I only primarily just use one indicator, and that's the volume profile. Okay, and I don't use it to get into an actual trade 100% right out the gate. I use it as a tertiary indicator, which means I'm looking at that as last resort, or the last thing I look at before I engage in a trade. Supply and demand, structure, reading structure, that's what matters to me. So just want to show you this. And if the market is, say, for example, as we're moving to the upside, and we'll look at the candlestick chart here in a minute, but we're moving to the upside like this right here, okay? And let's do another one. So basically what we're doing is making higher highs and higher lows, right? This is your highs, your lows each time. As long as the market doesn't come back and break below any of these points, then we should continue pushing to the upside, right? And we're looking for the flow of the market to continue pushing higher and take out the most recent high. Now, let's say that we then switch to the downside and make a lower high, and then push lower. This is a break of structure below this point right here, okay? Now, most people will say that it's a change of character. That could be the term as well. But the market is shifting and reversing at this point when we make this first run to the downside and make a low right here. It took out this low that it made as it was pushing higher. Even though this is a higher low, it's still a low, okay? The market runs to the downside. We make our first low, all right? Then it pulls back. And then we have where it's breaking structure lower. So this would be an opportunity for a pullback to an area of supply. So again, this will be a supply zone because now the market has reversed. At this point where it makes its first low and breaks below the most recent low, or the most recent higher low, it was pushing to the upside, when it comes down and makes this push coming down and breaks that low, that's the first low that it makes as it's engaging or moving lower and trying to shift or reverse to the downside. The next move is a lower high, okay? As long as we don't come back and start taking out highs above, then we should continue pushing lower and breaking this area of structure. So we broke this low, which is taking out structure, which is also a change of character with this low here. We make a lower high and then break structure right here below this low. Then I would be looking for the market to pull back to some area of supply to go short, okay? Now, for example here, when the market is making higher highs and higher lows, and we are in this channel bullish to the upside, I'm going to show you the channel. You should be able to see, just be able to see this with your eyes. The market's making higher highs and higher lows. Long as we do not come down and break below the most recent higher low, okay? And we broke structure above here, so we dip back here and we don't break below this area here, and we make a new higher low, we should keep pushing to the upside and taking out this low right here. Okay, this high right here, all right? Now, some people will classify this and say, okay, this is a high, a higher low, okay? And this is a new high, right? And as long as we don't come down and break below this area structure, like I said, then we should continue pushing higher. So if the market pulls back after breaking structure here, made a high, higher low, broke structure again, and then dip back and tested an area, we're looking for pullbacks to continue in the pace of the market as it's pushing higher, okay? So let's say, let me do this right quick. The market pulled back, like after breaking this area structure, came back and tested some demand area here. I'll be looking to go long, right? Same thing here. If it pulled back to some area of demand down in this area, I'll be looking to go long. And then the same thing right here. Now we know at some point, as the market continues pushing higher and higher and higher, we got to understand one thing. If there are imbalances or gaps that are resting below that need to be filled, imbalances are spaces in between candles or back at a zone that have to be filled. Basically where the market is pushing to the upside or to the downside with tons of orders that are filled by the banks and institutions. So if the market is running to the upside real quick and it's leaving imbalances or gaps in between candles as it's running to the upside, they're going to want to come back down and fill those imbalances back, okay? Because they're more likely trying to fill orders that are resting on the books as they come back down to, engage and continue moving in the same position or the same move back to the upside, okay? Now, again, a reversal happens more so. It happens where the market has made its final ascent to the upside, a high, and then it makes its first low, taking out this area structure right here, making a new low, followed up with a a lower high, okay, and then a new low coming to the downside. Then that's when you'll be looking for a pullback to an area of supply to go continue short, back to the downside, taking out structure right here, right? And now we made a broke structure, lower high, and broke structure again with a new low, okay? So there's two patterns, going to the upside and then coming to the downside. That's primarily what it looks like. Now, let's say the market, for example, we're looking to say, okay, we're running lower. Now we know we're bearish. What would we be looking for as far as a reversal in the market back to the upside? It's just all it is what we found right here coming from the top down is this flip back to the upside. So this is like what a lot of people talk about as a head. This is a shoulder, a head, and a shoulder. It's typically when you see the shoulder being taken out back to the downside right here as it's coming lower. So it makes a shoulder pattern, a head, meaning the final stop, and then a shoulder pattern here. Left shoulder, right shoulder, breaking structure lower. That would happen in inverse of if we're moving to the downside bearish and moving back bullish, okay? So this would be an inverse shoulder, the inverse head, and then if it does something like this right here and break structure going back to the upside, inverse. So it looks like an M pattern from the upside and a W pattern from the downside, all right? Inverse, and then that's your regular pattern coming to the downside, inverse going back to the upside. So right here, this would be another change of character or structural break back to the upside. The first break to the actual, say for example, upside where it's taking out structure. So this would be the first break above, okay? So we made a high, a higher low, the first run to the upside. Then it makes a break structure here, makes a new high, took out the most recent lower high right here, and then it pulls back and makes a what? A higher low. Now, as long as we don't start coming down and breaking below areas of structure coming lower, and we make a higher low right here, okay, and then break structure to the upside, then I'll be looking for a pullback to do what? To go long somewhere in this area right here. Now we've got a full-on reversal. You can see the W pattern from the downside as it reverses back to the upside. That's all structure is. I mean, it really is. Either we're moving to the upside or we're moving to the downside. And sometimes we'll move sideways when we're ranging. Stay out of those type of areas. Wait for the market to break some structure going back to the upside once we reverse and look for pullback to go long. Like this could be a major high. This could be a major low right here. So wait for structure to be taken out. You should know when it's moving to the upside, it makes a high and then it reverses back to the downside. This is your most recent high. Wait for that to be broken, or wait for it to come back and take out this low right here if it's not going to take that high out, and then look for a pullback to go short. Just make it very simple. It's not complex, okay? So if I was to, let me do away with this right quick. Show you now on the candlestick charts. Take a look. You see where the market is making highs, higher lows, highs, higher lows, and we're not coming down and taking out any significant area of structure, right? Any major low, any significant lows, right? Any higher lows, okay? As we're moving higher, then we're bullish to the upside, and we should only be looking for key pullbacks to areas of demand, all right? So as long as the market is bullish and you're making higher highs and higher lows, then you're looking for pullbacks to key areas of demand. That's where I failed at, was being able to read structure and understand which way to clearly actually trade. Now, when we're trading supply and demand, we want to be taking high probability setups. And again, that's where I talk about in the private community, lots of tips and information and advice surrounding the strategy, how I trade, and what you need to really pay attention to and look out for when it comes to actually trading, like supply and demand. Yeah, you can trade supply and demand, but there are some additional things that are going to help make one setup or these trades more carry a higher probability than others, okay? I don't like to take trades at retested zones. I want to make sure they're not mitigated, that they're actually solid zones that where imbalances rest back at them. I talk about these things because I'll run you through setup after setup, talking about the strategy and the trades that I take, ones that I post over in the Discord. I break them down in detail. Plus, you get so much video content just as well that help you out if you're anyone that's struggling with in your own trading. But not just if you're a newbie or a beginner trader as well. More experienced level traders, someone that may be trying to understand how to trade futures and just want to add another strategy or arsenal to their arsenal so they can maybe trade supply and demand, take a different approach to it. I use what's called a multi-chart confluence strategy, where I start with the higher base range chart, looking at top-down analysis, marking up my higher range chart first, and then move it down, scaling down to a lower base chart to look for an entry within an entry. I like to classify it as the zone within a zone approach. Okay. Then you see the market's making higher highs and higher lows as we move to the upside. All right. So as long as we're doing that, then we should be looking for opportunities to actually go long. Okay. So if we look at this area right here, we would think that, okay, the market looks like it's moving to the downside after making this high here. We broke below this area structure right there. And then if you were looking for a pullback, then this was a high probability setup, then you can look for this pullback to this key area of supply right here, aggressive selling right here. But this is a low probability setup. And these are the type of things that I talk about. What makes up a difference of a high probability versus a low probability setup, to all those that are part of the private community. All right. Again, if you want to become an elite or an ultra elite member and receive all the beneficial information, the knowledge, the education surrounding personally how I actually trade and the strategy I use, again, the link is down in the description portion of the video. It's titled Ultra Elite Supporter. I'm going to show you right at the end of the video where you can go to find it. It's down in the description right below in all the videos. Okay. So again, you could go short right here, but this is a low probability setup, so I wouldn't take that trade there. The market then runs to the upside. It breaks structure back to the upside. So now we're back bullish again to the upside. Short little downtrend before reversing. Not really before reversing, but breaking structure higher as we move higher here. So then it makes a high, it makes a higher low, and then breaks more structure to the upside. Coming down, we didn't break any structure coming lower, meaning we didn't take out any significant key area of a low and a swing coming to the downside. It did make a low here, but then we broke structure back to the upside. It comes down. This is a high probability demand zone right here. You can see the aggressive selling to the upside, broke structure. It comes back down to this area here. And this is about, I don't know, when did it tap this zone? Tap this zone around 7 a.m. in the morning. This is a high probability demand zone. Would you look to go long from here? Yeah, definitely can look to go long here. But you just have to be mindful too, just as well as are there areas of supply resting above? Are there areas of resistance resting right above in which the market could actually, stop it? This is a lower high. It breaks structure below this area here. It comes down, tests this demand zone right here. So we do have supply resting right above us up here. But we also have other levels, like a lot of people fail to realize and recognize, which is the 100 and round number levels. I talk about those in the private community as well in videos. But anyways, what I'm trying to say is that this is a demand zone here. Each one of these candles on the higher range chart are like 30 points. Okay, so I don't take my trades from the higher base chart. What I'll do is, again, I'll scale down to my 24 range chart, my lower range chart, to look for an opportunity to go long from here, because we are bullish to the upside. So I explain these type setups following structure, because that's what I failed at to get right when I first started trading. And I'm going to say this right now. You might be saying, well, where does it reverse at? Well, look here. It runs to the downside. We make a low below this low here. Okay, this is the breaker structure. This is a higher low. Makes a new low. Makes a higher low. A lower high here and break structure below. So this is the reason why you can look for an opportunity to go short when the market comes back up to this area here. But you got to pay attention to price action and understand what's taking place with price action as the market retraces back to the zone, because right below you could be a key area of demand where the market may hold up at, pushing back to the actual upside. So this is a very good indication or kind of diagram looking at the candlestick chart where the market was bullish, then coming back bearish, and then going back bullish to the upside. Same thing I just showed you in the line diagram above as I was starting the video out. So again, you have to understand structure if you really want to take good setups. So the best thing I can recommend to you out there is to be patient. Now, people always ask, can they trade directly from a lower base chart or lower time frame chart? I don't trade time based chart, so a lower range chart, yes, you can. But I would trade in the overall direction of the market. If we're bullish here, then look for lower range chart setups going to the upside. If we're bearish to the downside on the higher range chart, then look on the lower range chart to take your scalps going short. All right. So that's what I want to share with you. Now, if you want to talk about becoming an ultra elite or elite member, again, the link is down in the description portion of the video. But first, I want to say, if you are not part of the Discord community and want to join, scroll down to the description portion of the video. Scroll down. You'll see a link that says Discord. Click on that and you can join the Discord. It is free. If you want to become an elite or an ultra elite supporter of the channel, you receive so many perks and rewards. This is where you get the behind the scene, closed door information, things that really kind of, let you know, kind of a cheat sheet in a sense, where I'm going over my trade breakdowns. Like, I'll post my entries or trades I'll take over in the Discord, but then I'll break them down to the private community. All right, I spend time in detail. I make a lot of video content because I want to see people become knowledgeable and see them become profitable as well. But you got to be patient and take the time. If you're in this business or want to get to this business thinking you're going to turnkey and make a lot of money overnight, it doesn't happen that way. Okay, I take the approach of compounding with growth to build an account using one solid strategy surrounding supply and demand and multi-chart confluence. Again, to become an elite member or an ultra elite, the link is down in the description portion of the video. It's titled Ultra Elite Supporter. Click on that and you'll see a few. Matter of fact, I'll show you right now. Let's take a look here. If you click on one of the videos, this is one I did recently. You scroll down to the bottom and click on more right here. You'll see the Discord link is right there. You'll see click this right here, little finger motion there. It says click the link below to become an ultra elite supporter to gain access to the trade breakdown video playlist, live recorded trading sessions, market recaps, and more. Click this link right here. Click that link and you can see there are 3 tiers. These 2 are the one that you probably want to kind of join up on. You'll see the perks and rewards when you click on more about perks. You receive the loyalty badges, custom emojis, private reply to comments, but you also receive a whole lot more than just that, because you receive, let me see here, scroll down, scroll up, let's see, which way is it? Sorry, wrong tier. Here it is right here. You receive also the detailed trade breakdowns, the member shout outs, early access to videos, hand selected video playlists. These are the most important things, like the detailed trade breakdown, the hand selected video playlist, because that's a video playlist that I pulled important videos from the channel, and you'll see a series of link by link videos. Those you're going to really want to watch. They're going to help you, or should help you in your personal trading surrounding how I trade. Okay. Also, you receive the detailed trade breakdowns. Now, that's very important because those are the trades these are trades that I posted over in the Discord. So if you're a Discord member, it's free to join, where I break down my trades in much detail, going over structure, stop loss placement, profit target areas, just to give you the full on mindset of what I was looking at, why I took those trades, so that you can understand and look for similar trades, just like, for yourself when you're back testing and forward testing. That's one thing you definitely want to do, is forward test and back test any strategy you use, because not everyone's strategy may work for everybody's personality, but most people who trade or are part of our Discord community are using the same similar strategy that I use, multi-chart confluence, or using some level in which I have of other strategy in which I have actually shared with them. So that's $6.99 a month. If you want to become an ultra elite supporter, you receive everything that I just mentioned, plus you receive I'll show you here. Here we go. Right here, all this right here. Okay. Plus, what you receive in addition to is live recorded trading sessions, my full-on recorded trading sessions where you see me and watch me trade. I'm talking about structure. I'm walking you through price action. We're talking about trades as I take them. You see me take them. You see me engage in where I place my profit targets. I talk to you why I place it there, stop loss placement, everything, so you can see, these actual trades that I'm taking. Plus, you get the market recap videos, and that is $14.99 a month. So that's a month, guys. I mean, very inexpensive, very beneficial. If you don't believe me, you can come over and ask the Discord members, those that are part of the community, and those that are members or supporters of the actual, and sign up for one of these tiers here that support the channel, okay? Because that's what you're doing. You support my emphasis not only as a trader, but as a content curator, by me giving you valuable information surrounding a great strategy that actually works. I want to see people become profitable. So if you're interested in becoming either an elite or an ultra elite supporter, there it is. Click the link down in the description portion of the video. Now, if you're not a current subscriber already, if you haven't already subscribed to the channel during this video with me doing all that talking, go ahead, click the subscribe button right now, and make sure to turn your post notifications on by clicking that bell that appears as soon as you click the subscribe button. But also make sure to turn your post notifications on. That's how you do that. You click the bell, it turns your post notifications on. That's going to ensure you never miss any of the uploads here on the channel. But what I really would prefer, or really like for you guys to do, is if you can click that like button, that thumbs up button, especially if you found some value in today's videos, or if you found value in any of the video content that you watch here on the channel. Make sure each video that you actually watch, you click the thumbs up button. Thank you. I appreciate it. Take care, and I'll see everyone in the next one.